Hello everyone, my name is OY, the creator and owner of the OYfx BNC strategy. I have other strategies which are working very fine, but let me just use this opportunity to explain to you exactly how the OYfx BNC strategy works. It's actually a software. This software actually is just going to give you an entry condition into the market and then make money and go. You're trading with risk management, so you don't have to over leverage on your account. Now, what I'm going to tell you is that I'll advise you to go for just one candle or one bar with multiple positions. So, for instance, you're using a lot size of 1.00. If you enter one bar in the crash market, crash 500, you need 1,000 points to give you one bar. Now, if you should enter just one bar on double, what's it called? On two positions, it means that after the close of that trade, you would have gotten $2 and have exited the market. So if you want to say you want to take $2, a couple of $2, like 10 $2 is on the market today, you'd have made a cool $20 or $20 and then gotten away, with it. How do you enter, these points I'm talking about? Let me quickly enter a trade and show you how it is, how you can do that. So you click on buy. The moment you click on buy, you see that the trade that you have entered will be displayed below here. Let me pull it back up a bit. Okay, so this is a trade you have entered. Now you want to locate the TP and then click below the TP on the trade. When it opens, you quickly type in, if it's the crash 500 market, you type in 1,000. Then you see this modify button. So you can copy this and then repeat the action on another trade which could be running. That is if you enter two positions. So that's 1,000. So I modify. You've seen that the red line has been put, that's the take profit line, which has been put right above the entry, my entry line, which is the green dash line. The moment price touches the red, my profit has been realized and it will be put into my account. That is how to enter a trade. Okay, so we are scalping. We are not swing trading. We are scalping. So we want to scalp one candle at every opportunity we get. So these are the conditions we are looking for. Whenever the blue line crosses the orange line upwards, enter and take one candle. I'm not saying when it touches. Wait for it to cross. When it crosses, enter and take one candle. On two positions, fine. Don't go more. Don't over leverage on your account. Don't over leverage. That's the first condition. And this condition runs through all the other instruments. You understand? And all the other time frames as well. Let's go to Boom 500. Boom 500 as well, you need 1,000 points for one bar. Whenever the blue crosses the orange downwards, because the boom market is a downward trend, it's a sell trend. So whenever you realize that the blue has crossed the orange downwards, enter and take your one candle on two positions and leave the market. You see another condition, you enter and take it. When price is below the purple, if it's in the boom market, when price is below the purple, it means that price is doing a sell. So price is in the sell trend. When price is above the purple line, it means that price is doing more spikes. You understand? So price is upward. It's an upward trend. Likewise, when you find price in the crash market, it is doing a buy. It's a buy market, a buy bias market. So when you find price above the purple line, then it's in an uptrend. When you find it below, then it means that there will be some more crashes. So because it's in the downtrend. So that is it. Now, whatever happens in the what's it called? Whatever I explain in the crash market, just do the opposite of it in the boom market. That's what it is. For you to get one candle or one bar in crash 1,000, you need 10,000 points. 10,000 points. Crash 1,000 is 10,000 points. And then boom 1,000 as well is also 10,000 points. So you do it like how I did it, in the beginning. All right, that's basically what that's it. All right, now I said that this condition I've spoken about, the blue crossing the orange, that condition and taking one candle, it happens in all the time frames. Look at 2 minutes. 2 minutes is telling us that The blue, let's go back into history a bit. The the blue crossed the purple, sorry, the blue crossed the orange here, and then this candle was what closed it, so you can get your cool 1 bar and go scot free. In the 2 minutes time frame for crash 5,000, 1 bar will be 2,000 points. In 3 minutes, 1 bar will be 3,000 points. In 4 minutes, 1 bar will be 4,000 points. So that's how you know the point you're looking for. All right, let's go back to 1 minute. We'll be trading in a 1 minute to start. So you practice this on demo. My advice is that don't go straight to live after getting this system. Practice it on demo and master it very well. You can now state for yourself that, oh, today I want to enter a couple of trades. Maybe I want to do 20 blue crossings. I want to do 10 blue crosses. I want to do 5 blue crosses, depending on you. It has to be dependent on you. And then don't overtrade. Because when you overtrade, you get tired. Your brain or your mind will start, telling you what you don't want to hear, and you'll be losing trades. All right. So basically, that is it. That is the first condition I will explain or I will talk about. The next condition, you can see some arrows on the market. Now let me first talk about the green arrow. This green arrow. Anytime you see this green arrow print, it means that on that particular candle that it has printed, you can take that candle comfortably. Sometimes it appears like here, and then right after the candle has formed, there's a crash. Now, this green appears for you to know that it is safe for you to trade. So go for just one candle on this. How would you know that where it has gotten to, there's not going to be a crash? Note that you're supposed to trade with care. Just trade with care and be cautious. You understand? So if this green prints and you don't want to go for a full 1,000 points, you can go for 800 points on multiple positions. You get some profit. You get it. All right. So trade smartly. When you trade smartly, you make money smartly as well. We go to the next candles. Sorry, we go to the next arrows. We see a white arrow. We see some white arrows printed here. Whenever you see a white arrow appear, the system is telling you that there is going to be there's a possible crash. So exit the market. Now, in an instance where it crashes and another arrow does not appear below it, don't enter for the buy which is taking place. Don't. Only buy after when the system has produced a white arrow and it has crashed and it didn't form any other arrow but a yellow arrow. Let's look here. White arrow appeared and then there was a crash. When it crashed, some buys began and then a yellow arrow appeared. The yellow arrow appears to confirm that particular buy. So enter one candle on this yellow arrow. Don't trade the yellow arrow if you find it right below this crash bar or candle. Sometimes you can get away with it. It may not crash again. But sometimes the yellow will print below or beneath the crash arrow. Or, sorry, beneath the crash bar. And another crash will happen. You understand? But I have noticed that whenever the yellow distances itself from the crash, you can take that particular yellow comfortably. 1 bar. Comfortably. When you go back into history, you see that what I'm saying is not, it's the truth. This, you get this bar for free. This, you get the bar for free. This, you get the bar for free. This, you get the bar for free. You get the bar for free. This, you get the bar for free. So basically, that's what I'm talking about. So watch out. In another instance, you see that the yellow arrow is moving along. It is trailing along your buy. So when the buy arrow prints, when the buy bar prints, the yellow will move. Until the yellow is stable, don't pick that trade. Until the yellow says I'm not moving anymore, don't enter for that particular buy, because it could have crashed. It could have crashed you. So let the yellow be stable before you enter the trade. Now, other conditions. Now, this other condition I'm going to mention is for both the crash and then the buy trend. If, let me drag this vertical scale down a bit so it exposes. If the system prints a deep green box like this, the deep green box is a verified support. It means that when price crashes onto the verified support, most of the time it gives a long healthy buy without a fear of a crash exiting you from the market. But it doesn't mean that it's automatic. No, this is a system. Nobody owns the market, so be careful. All I'm saying is that when this forms, it crashes onto the green, it's going to give you some buy, a good buy. If the green arrow appears, take your cool 1 bar on the green. Wait for the yellow to appear. When yellow appears, take your cool 1 bar on that yellow, because this is going to be a healthy buy. Likewise, when the blue comes to cross the orange, take your 1 bar. And this condition reflects in all the other time frames. Another condition we're looking for you to be able to escape a crash. These lines which have been printed here are showing or telling you of possible resistance areas. These are resistance areas, so price could get there and crash. But most of the time, price could only pass when the market is doing a strong upward trend. If you find prices below the purple in the purple line in the crash market, it means that it's doing a downtrend. But when the present buy which is going on goes to pass the purple line, you can take your 1 bar and go your way. You can take 1 bar and go your way. I'm saying 1 bar because I am trying for you to use risk management to make your money and go scot-free. If you're not lucky and you're crashed, you lose money. In an instance where price is doing a very good long buy and there's a crash, most of the time it recovers. Let's go into history and see where we'll find a very good. This is an example. A very long buy gave a crash and it recovered right after. Another crash came and recovered until another crash came, and so on. So that's what I'm trying to say. If a green arrow appears after a crash in a trend, in a buy trend, take that 1 bar, you get it. So these are the conditions you're supposed to be looking for. Now let's go back to the colors which are printed on the bars which are printed here. Now price is rising, and price is expected to rise and rise and rise because it's a biased buy market in the crash indices, or in the crash index. Now when price is approaching these resistance areas, be careful. When price is approaching these colors above, these boxes, or these prints above, be careful. Price could get there and crash. If you want to catch some what's it called, crashes, you time price when it's getting to these areas, because it's possible. For you to be able to know that as for this particular crash is going to happen, it's got to be a verified zone, a verified resistance zone. This is untested. It means price could get there and return. Price could get there and return. Price could get there and return. But the verified is like almost 95% sure of a possible crash. So you bear that in mind. When you find out that the histogram on the MACD is pointing upwards, the upward movement is telling you that price is in an upward trend. Downward movement is telling you that price is in a downward trend. That is all. I hope this helps you to understand how to trade the system very well for you to make the best out of it. Thank you so much. My name again is OY of OYfx.